to the Accountancy Learning sample paper walkthroughs. In this video, I'll take you through the Level 3 Financial Accounting Sample Paper 2 Task 3, all about the trial balance. So Part A, let's identify whether the statements are true or false. An extended trial balance for a partnership will have extra columns for the appropriation account. So this is false. The appropriation account will not appear on the trial balance. A capital account may appear on a sole trader extended trial balance but will never appear on a partnership trial balance. This is also false because the capital accounts will appear on the TB and they'll just be separated out by partner. Identify whether correcting each of the following errors will include an entry into the suspense account. So the suspense account is there to help us correct errors where there's a one-sided entry or an entry that doesn't balance. So a payment for motoring expenses was debited incorrectly to the motor vehicles account. All other entries were made correctly. So we won't need an entry to the suspense account to correct this one, as we will literally debit and credit between the motor vehicles and motor expenses account to correct. The VAT column in the purchases daybook was undercast. The other columns were totalled correctly. So as we've got an imbalance in our debits, so our debits do not equal our credits on this one because the VAT column was undercast, that means we will need an entry into the suspense account. Jacob runs JS Supplies, which isn't registered for VAT. Identify the effect on the elements on the accounting equation for the following transactions. An entry should be made in all boxes. So JS Supplies borrowed money and paid it into the bank. So we can look here. So borrowing will be a liability and the bank is our asset account here. So we've identified what we're going to be affecting here. So it's going to have no effect on capital, but we've borrowed more money, so we're increasing our liability, and we've paid that money into the bank, so we're also increasing our assets. JS Supplies purchase stationery items on credit. So here again, we've got a liability account. We're purchasing on credit, so we'll need to pay later. And now stationery is an expense, so that will affect the profit or loss, the statement of profit or loss. So we've purchased more on credit, so our liabilities increase. And because it's more expenses, it's going to reduce our profit, which means it's going to decrease our capital. And there'll be no effect on assets. Sam is working on the accounts of a client. He's reconciling the balance on the payables ledger control account to the sum of the balances on the individual accounts within the payables ledger. So we are given the payables ledger control account and we're given the individual accounts, and we can see we've got a difference. He's discovered 4 errors, which are shown below, and we now need to identify the entries to correct the errors. So each error should have 1 entry. We need to put no effect in the last column if the error doesn't affect the payables ledger control account or the total of the payables ledger. So if it doesn't affect the balance, then it's no effect. And we are answering to 2 decimal places. An invoice from John Green for 140.70 has been posted to Jan Grun's account in the payables ledger. So it's gone into the payables ledger, so the balance is correct. It's just sitting in the wrong account. So it's not going to affect the balance, so therefore there's no effect. A credit note for a discount received of £12 has been entered into the individual payables account, but not included in the payables ledger control account. So we need to put it into the payables ledger control account. We've received a discount from our supplier, so it reduces our liability. So it would be a £12 debit. An invoice for £60 has been posted to the wrong side of J. Smith's account in the payables ledger. So this should have gone through as a credit. So this should have been a credit, but actually it's gone through as a debit. So the first thing we're going to do is credit 60, which will get rid of the debit, the incorrect debit that's in there. And then we credit again. So we've got two lots of 60 on the credit side. It's in the payables ledger where the error is. So we'll do a £120 credit to the payables ledger. Then the last one, the total column in the purchases daybook has been overcast by 100. So the total column is what goes to the payables ledger control account. It's been overcast, which means too much. So there's too many credits in there. So we're going to debit by £100 to make the correction. Sam is now working on the accounts of another client, Nicole. The ledger columns of the extended trial balance have been produced for the year end 31st of March 20x8. We're given the debit column and credit column totals, and we know that a suspense account has been set up for the difference. So we've got a £500 difference there. We're then told that Sam's discovered some errors and omissions, which we've got listed in the bullet points. And Part C asks us to complete the adjustment columns of the extract of the adjusted trial balance to account for these. We shouldn't combine any entries, and we work to the nearest whole pound. Okay, so a bank payment for rent for 4,800 has been reversed in the ledgers. So we know that we're going to be dealing with the bank account and the rent account because they've been reversed. So what should have happened is we should have credited the bank and debited rent, but the opposite has happened. So what we need to do, because the bank payment has actually gone through as a credit because it's been reversed and the rent has gone through as a credit, to reverse the incorrect debit in the bank, we're going to need to credit by 4,800, and then we need to credit it again because that first one will net it off to zero, and then we credit again. And the same for the rent. It has been credited, but we need to debit it twice. So to fill that in, our double entry in the bank will be 9,600 credit for the bank, and rent will be 9,600 debit. So that is a balancing journal, so the suspense account hasn't been touched. The total column in the sales daybook has been overcast by 1,000. All other calculations in the sales daybook were correct. So the total column is going to be for the receivables ledger control account, increasing what our customers owe us, so increasing our asset. So therefore, we are going to need to reduce that balance. So we will credit the receivables ledger control, but all the other entries were correct. So this is an imbalance. So now we're going to use the suspense account for the opposite side of our journal. The business owner took 1,500 out of the bank as drawings. It's being recorded correctly in the cash book but omitted from the drawings account. So again, this is a one-sided transaction. So to correct it, we're going to put the debit into drawings. So it's gone through correctly in the cash book, but we need to put the 1,500 debit in drawings And now we're going to use the suspense account to balance that off for 1,500. And then our last one is that closing inventory of 8,428 haven't been made, no entries have been made. So we've got two entries to make, financial position and profit or loss. It's an asset in our statement of financial position, so that's going to be our debit. And it's part of our cost of sales formula in our profit or loss, which is our credit. So again, our journal balances. And you can see there we've got a £500 difference in our debits and credits for our suspense account, which then cancels out the original 500 debit. You've now been asked to complete the trial balance as at the 31st of March X9, and then we're given some different information. And Part D asks us to complete the trial balance extract. So accrued income at the year end has been recorded as £1,000. So the accrued income then, so that means income that we know is for this current period. We're going to credit into our income account, which means we're going to debit our accrued income account. The allowance for doubtful receivables figure has increased by 100. The balance as at the 31st of March 20X9 is 1,800. So be careful here because you're doing the year end and it's telling you that it's increased. This is the year end figure. So we don't need to do anything with that 100 because we're doing the year end and they've told us what the figure is here. That £100 has already been added on. So it's going to be a liability, it's a provision for us, so a credit. At the year end, the business is owed VAT of 540. So HMRC owes the business. We don't owe them, so it's not a liability. So it's going to be a debit balance of 540. During the year, there has been a disposal of a non-current asset which resulted in a gain of 250. So the gain is the 250 on the credit side. Customers of the business have taken advantage of prompt payment discounts of 1,820 during the year. So if the customers have taken advantage of the discount, it's an expense to the business. So 1,820 there. And we've finished all of our points here, but we've still got the outstanding line at the bottom. And this is where we're now going to come back to this £100. So the 1,800 was our balance at the end of the year, but that's increased by 100. So it's going to be an expense to the business. So we put our £100 debit for the adjustment on the allowance for doubtful receivables. That concludes task 3.